Welcome to our deep dive technical analysis of V's Media Holdings Limited, ticker VSME, as of December 11, 2025. This stock has captured attention due to its dramatic price collapse and wild volatility. In this video, we'll break down the numbers, trends, and signals that define VSME's current state. Whether you're a cautious investor or a risk-loving trader, understanding these dynamics is crucial before making any moves. Let's start by setting the stage with a general overview of what's happening with VSME and why it's become a case study in extreme market behavior. VSME closed at just 0.084, which is dramatically below its 200-day simple moving average of $1.14. This means the stock is trading at less than 1/13 of its long-term average price. Over the last 3 months, VSME has plummeted from highs near $3 to below 10 cents. Such a steep and sustained decline is a textbook example of a catastrophic bear market. The long-term trend is overwhelmingly negative, and the stock has lost nearly all its value in a very short time frame. On December 11, trading volume for VSME exploded to 140.1 million shares, compared to just 3.5 million the previous day. This kind of volume spike is rare and often signals a major event such as panic selling or a speculative buying frenzy. In penny stocks, such volume surges can indicate a capitulation bottom, where sellers give up, or a pump attempt by speculators. The volume ratio of 12.33 confirms that trading activity was extraordinarily higher than normal, making this a day of extreme market action. Despite a slight daily gain of 3.07%, VSME remains below all key moving averages. The current price is under both the 5-day SMA 0.092 and the 10-day SMA 0.115, signaling that even short-term momentum is negative. This means that, while there was a minor bounce, the overall pressure remains downward. In technical analysis, being below these averages is a sign that sellers are still in control, and any rallies are likely to be short-lived unless a major reversal occurs. Looking at the longer-term moving averages, the picture is even more grim. The 50-day SMA sits at 0.778 and the 200-day SMA is at $1.14. With the current price at 0.084, VSME is trading far below both, highlighting the depth of the ongoing downtrend. This gap between price and moving averages is a strong indicator that the stock is in a prolonged bear market, and recovery would require a significant shift in sentiment and buying interest. The Relative Strength Index, or RSI, is at 19.63 for VSME. This places the stock deep in oversold territory, which is typically below 30. While this might suggest that selling is exhausted and a rebound is possible, penny stocks like VSME can remain oversold for extended periods. It's a warning sign that the stock is under extreme selling pressure, but not necessarily a buy signal until other indicators confirm a reversal. The MACD indicator for VSME is negative at -0.185. But it's slightly above its signal line of -0.231. The histogram is positive at 0.047, suggesting that while bearish momentum is still present, it may be slowing down. This divergence can sometimes precede a short-term bounce, but in the context of a collapsing stock, it's more a sign of deceleration rather than a clear reversal. Oscillators provide additional clues about market sentiment. The stochastic K is at 7.92, deep in the oversold zone, which usually means the stock is due for a bounce. However, the stock RSI has rebounded to 46.3, a neutral level, showing some indecision after the recent crash. These mixed signals reflect the uncertainty and volatility that dominate VSME's current trading environment. The Bollinger Band width for VSME is just 0.963, indicating a tight squeeze. The price is hugging the lower band at 0.072 with a %B position of 9.32. This means the stock is trading at the very bottom of its volatility range. Such squeezes often precede sharp moves, but with the current trend, the risk is that any move could be downward unless buyers step in aggressively. VSME's volatility is off the charts, with the true volatility NATR reading at 76.42. This level of volatility is extremely high even for penny stocks. It reflects a chaotic trading environment where prices can swing wildly in either direction. For most investors, such volatility is a red flag, signaling high risk and the potential for rapid losses. Money flow indicators paint a bearish picture for VSME. The Chaikin AD oscillator is negative at -1.48 million, signaling that selling pressure has dominated. The on-balance volume OBV is around 292 million, but with the massive price drop, this suggests that the recent volume spike is more likely due to churning or panic selling rather than genuine accumulation. The trend in money flow is clearly negative. A linear regression model, which projects price based on historical trends, predicts VSME should be trading at $2.98. However, the actual price is just 0.084, a staggering deviation of nearly minus 118%. This statistical anomaly highlights just how far VSME has collapsed from its expected path, underlining the severity of its decline and the breakdown of normal market behavior. VSME is currently trading right at its pivot point of 0.084. Immediate resistance lies at 0.091, and the 5-day SMA at 0.092. A breakout above 10 cents would be needed to show any real strength. On the downside, support is at 0.076 and the recent low of 0.074. If 0.074 breaks, the stock could enter uncharted territory, with no clear floor in sight. Let's pause to define a bear market. In technical analysis, a bear market is a prolonged period of declining prices, typically marked by a drop of 20% or more from recent highs. For VSME, the decline has been much steeper, with losses exceeding 95% in just 3 months. This context is crucial for understanding the risks and dynamics at play. Oversold conditions occur when technical indicators like RSI or stochastic fall below certain thresholds, suggesting that selling may have gone too far. For VSME, both the RSI and stochastic K are deep in oversold territory. While this can sometimes precede a bounce, it's not a guarantee, especially in penny stocks where oversold readings can persist for long periods. To visualize the recent volume spike, imagine a bar chart with daily trading volumes for the past month. Most days show modest bars, but December 11 stands out with a towering bar, dwarfing all others. This kind of spike is often a sign of panic or speculative activity, and it's a key signal for technical analysts watching for turning points or traps. Let's illustrate the relationship between VSME's price and its moving averages. Picture a line chart with the stock price in red, the 5-day SMA in blue, the 50-day SMA in green, and the 200-day SMA in orange. The price line sits far below all the moving averages, visually confirming the depth of the downtrend. Now let's visualize the oversold signals. Imagine a dual-panel chart. The top panel shows the RSI dropping below 20 and the bottom panel shows the stochastic K line near 0. Both panels are shaded red below their respective oversold thresholds, highlighting the extreme conditions. To understand the volatility squeeze, picture a price chart with Bollinger Bands. The price line hugs the lower band and the bands are tightly compressed. This setup often signals that a big move is coming, but the direction remains uncertain. Let's map out VSME's key support and resistance levels. Visualize a horizontal price chart with lines at 0.074 support, 0.084 pivot, 0.091 and 0.092 resistance. The current price sits right at the pivot with arrows pointing to the nearby support and resistance zones. In summary, VSME is a collapsed stock showing extreme volatility and overwhelming bearish signals. The massive volume spike without a price surge suggests churning between desperate sellers and speculative buyers. For conservative investors, this is a stock to avoid. For speculators, the only potential play is to watch the 0.074 support if it holds. A short-term bounce to $11.015 is possible. However, the risk of total capital loss remains very high. Always weigh risk carefully and never invest more than you can afford to lose in such environments.